Greetings to you all. Welcome you all to Chartmaster FX. Your boy Chartmaster here. Today we are going to look at the CAN, which is abbreviated as TCC. This is one of the standard operating procedures that falls under the magic comrades. As the name implies, the magic strategy. This strategy is really a magic one. So let's go straight into the business of today. So here, guys, is the anatomy of the TCC, the anatomy of the CAN. So guys, as you can see on our anatomy here, you can see that the market should be coming from a resistance line. So here, guys, you can see that this market actually made 2 points here. So the resistance line should be having at least 2 touches. As you can see, guys, here we have 2 touches. 1, 2 touches. So once we have 2 touches, the market actually goes down. As the market drops, we expect that when the market is actually coming from this side, it should actually do a rally, base rally. So here we can see the market rallied up and it created a base and rallied up. So take note that as the price break this resistance, it should actually break this resistance with strong momentum. So that's another condition. If this resistance is not broken, then the conditions of the TCC will have been violated. So you have to wait for the market to break this resistance line. Once this resistance line, the price goes up and it actually creates a cap area. Then once the price creates a cap area here, then the price drops. As the price drops, it drops back to the base where it was created, as the market was actually making a rally, base rally. So this base holds the price, which means this base is consumed. So once this base is consumed, the price goes up again with strong momentum, but only for a short time. So once the price does that, as now the price is actually approaching the cap area, it actually approaches the cap area in form of compression. So we call it compression to the cap area. So as the price is compressing to the cap area, then that's where you can be able to make your sell here. And you put your stop loss just above the cap area. So take note that we can divide this anatomy into 2 parts. Let's just break here. Once we put a line here, guys, all this information to your left, you have it on your charts. So this is historical data that we are using for the CAN. It's history. All this is history. All this is history. So what happens is that you wait patiently for phase number 1 to complete, where there is a resistance here and the price actually makes at least 2 touches and the price drops down. Once the price drops down, it goes up. Once the price goes up, it actually creates a base somewhere along here as the price is actually going towards creating a cap area. So once we have this condition, then we wait for this resistance to be broken in order for the conditions of the TCC to be valid. So once this resistance have been broken, it should be broken with great momentum. There should be momentum of price here as the price is creating a cap area. So once a cap area is created, then the price drops again with a strong momentum going to a base. Once the price reaches to a base, we expect that that base should hold the price, and the price goes up with strong momentum just for a short time. So as the price does that, as though the price is actually approaching the cap area, it actually approaches the cap area in form of compression, which is what we call compression to the cap. So once you see that condition, then you can be able to sell at the cap area. So guys, this is the anatomy of the TCC. As simple as that, guys. First condition, second condition, break with strong momentum, cap area is formulated here. The price drops with strong momentum, then the price does a shock up for a short time, and the price starts to compressing until it reaches to the cap area. Then you can place your trade here. So that's the anatomy of the TCC. So let's go to the terms and conditions for a sell setup. So guys, as you have seen from our previous discussions, we can only focus on one setup, whether we are dealing with a buy setup or we are dealing with a sell setup. We do this because we actually want to shorten the time so that we don't look at many setups. So, and for your own benefit, if you master the sell setup, then it's going to be easy for you to master the buy setup, because flipping the two, it might be a problem to you. So you have to master one thing, then you can be able to look for a buy setup. So that's why, guys, in this presentation of the Ken, I decided that we only need to look for sell setups. As you get experience in trading our standard operating procedures, then that's when you can be able to look for a buying setup. So guys, these are the terms and conditions for a sell setup under the Ken. So one of the conditions is that there should be a resistance of at least 2 touches. I've emphasized on that one. The price breaks the resistance with the strong momentum, and a base is created before the price breaks the resistance line. There is a base that is created. Then the cap is created after the end of a strong momentum. Price drops with strong momentum. Price creates momentum to the upside and compresses towards the cap area. So entry, place your trade on the cap area. Stop loss, the stop loss should be above the cap area. Your target profit, the target profit should be on a fresh demand zone. So we are going to learn about the fresh demands, consumed demand, engulfed demands as we go on with this course. I think I'm going to touch on that one on price action zones. I'll see a way to incorporate these things so that you can be able to identify on the markets when we are saying this is a fresh demand or it's not fresh. So let's go straight to the examples. So example number 1, guys, we are on step index M30. So as you have seen before, I actually trade volatilities indices and boom and crash and range breaker. So that's why you see always that I'm biased on those indices. So guys, it does not necessarily mean that this setup only applies on indices. You can apply them in any commodity of your choice. If you trade currency pairs, you can be able to apply it. It actually applies there. Anything that you are trading, you can be able to apply this concept, because this is purely market structure. It's all about the market structure, guys. So you can apply it wherever you want to apply it. You can apply it, guys. You can apply it. So here, guys, we're on step index M30, guys. So we can see here that we have a major resistance here of almost 1, 2, 3, 4 touches. So what happens is that the price actually drops down. As the price dropped down, We see again the price now is coming to the upside. As the price is coming to the upside, we see we have a rally here and we have a base here and we have a rally. So what happens is the price actually reached the resistance line. It actually broke the resistance line with the strong momentum. Once the price broke the resistance line with strong momentum, we see also that there was a drop with the strong momentum going to a base. Then the price went up with a shock, with a strong momentum, just for a short time. And the price started to compress until it reached the cap area. Once the price reached the cap area, then the price dropped. And look guys, we had a fresh demand here, so this would be your target profit on a fresh demand, and our stop loss would be just above the cap area. So take note guys that all this data, if I can draw a cross section here, all this data to your left, you have it on your charts. You will be having it on your chart. You have seen this resistance being broken with strong momentum, and this base has been created. If you had multiple bases here, like you have a base here, you have a base here, you have almost a base here, you are not worried. You are not worried at all, because the price is going to tell you where it needs to go. As you can see, the price ignored this one and it came here. So which means this is the base that we are looking for. So you will be having it on your chart. So now you are seeing a compression going to the cap area. Then you know that all my conditions have been met. Once you see that your conditions have been met for the TCC, then you can be able to place a trade. So you can see guys, this is a perfect example guys. It's almost similar to the anatomy. So this is how you can be able to trade and identify the TCC. So let's go to example number 2. So on example number 2 guys, here we are on crash 500 index on M15. So guys, you can see here we have a resistance line of at least 2 touches, which is one of the conditions, and the price dropped going down. And when the price was coming up here, we can see that we have a rally-based rally that was created, and finally the price was able to break this resistance line with strong momentum, and it went up to create a cap area. Once we have a cap area here, we can see that the price dropped down, and this base was able to hold the price, and now the price started to compress until it reached the cap area. Then you can be able to place a trade here. So unfortunately, I don't know where you would put your target profit, because we had nothing here on our immediate past on the history. So I don't know where you would put your take profit here, but your stop loss, you just put it above the cap area, then you are good to go. So guys, you can see this, we are saying compression to the cap guys, CP to cap guys, CP to cap guys. You never go wrong, I can tell you. With this one, you will never go wrong. So let's go to example number 3. So on example number 3 guys, you can see we have a resistance line here of at least 2 touches, 1, 2 touches. So we draw a resistance line. So here you can see guys, we are in crash 1000 index M30 guys. So what happened? The price dropped. When the price dropped here, the price started to rally up, and when the price rallied up, you can see here we have a rally, we have a base. So here guys, you have your multiple rally base rally. You can see we have this one, we have this one as well, we have this one. So you don't know which one is the correct one, but you don't care, because the price is actually going to tell you which one it needs to respect. And you can see that the price came here to this RBR, and this RBR was able to hold the price. And when the price was hold here, you can see that the price actually started to go up towards the cap area guys, in form of accumulation. The price started to accumulate. until it reached the cap area, and inside the cap area there was a decision point here, DM guys, a DM type 1 here guys, there was a DM type 1 guys. Then you can sell here and you put your stop loss just above here. So guys, this demand has been consumed, so maybe you would put your safest take profit, I think somewhere here. That's where you put your safest take profit guys, and maybe leave some of your trades to run. I don't know where you would leave the market here. So if you understand the price action zones guys, price action zones actually helps you to see when now, at least maybe when you don't have as many as some clear points, you can be able to use price action zones for you to see where you should leave the trade. So that's the advantage of the price action zones. So the journal for the price action zones is coming, and you are going to understand it because it actually helps you in many setups, especially the diamond etc. You need an understanding of the price action zones. They actually helps you. So let's go to example number 4. Example number 4 guys, you can see we have a resistance line here of at least 1-2 touches, and the price dropped down. As the price dropped down guys, you can see now as the price was coming up, it actually created a rally base rally, and you draw your base here. So once you have a rally base rally, you can see that the price came up here and created a cap area. So you have a cap area here, and guys, as we have a cap area here guys, as the price actually dropped down, it actually dropped down with strong momentum. And now as it actually dropped the strong momentum, you can see guys that the price actually started to compress going to the cap area. So here, that's where you can be able to sell, and you put your stop loss above here. Do we have a clean demand? Yes, we have a clean demand somewhere here. We have a demand, clean demand, and actually this clean demand was able to hold the price, going up. I don't know what happened after that, but I think the price actually definitely dropped down since we have some accumulation here. So maybe it might have down towards this clean demand here, and I don't know what may have happened from there. So you can see guys, we have a rally base rally, and here you can see that on this rally base rally, the price came down and it actually respected this base, and the price went in form of a compression to cap. And guys, you can place your trade here guys. This strategy guys, it's a magic comrade indeed guys. It's a magic comrade guys. I don't know why I'm telling you this strategy. I don't know, but it is what it is guys. It is what it is. Let's go to example number 5. Example number 5 guys, we have a resistance line here of touches 1 2. If we have a resistance of touches 1 2 guys, the price dropped down. You can see guys, as the price was dropping down, and you guys can see here we're on the range breaker 1000 guys, on the range breaker 1000 index on M30. So what happened guys, you can see here I was actually using examples of M30s and the likes. It's not like this strategy only works for M30 guys. You can use it at any time frame guys, at any time frame, whether it's a H4, whether it's a daily, anything guys, the time frame of your choice, you can use it guys. So in this example number 5, you can see that as the base was created here, the price went up with great momentum. As the price went up with great momentum guys, we have our cap area guys. The cap area is here, and you can see that the price came down with some strong momentum down to this base, and this base was able to hold the price, and the price went up to the cap area guys, and we had a Quasimodo level here, which actually makes it a more confluencing trade. And guys, I think there was a 3D here. There must be a 3 drive somewhere here, 3 drive guys, and we have a compression to cap guys. Then you can sell here guys. This is a magic comrade guys. This is a magic comrade guys. And with the magic comrade, guys, I don't know guys. I don't know if you don't make money in the market. I don't know what else to teach you guys. I don't know what else I can teach you guys. This is a magic comrade, guys. So yeah, basically that's how we trade the Ken. So I hope you enjoyed the video. So more strategies, more of our standard operating procedures that are there on the course outline are going to be presented in the coming days. So guys, go to your charts, go and try to locate or to spot these types of setups. Then you create your own flashcards. Once you create your own flashcards of at least five flashcards, then once you create your own flashcards, then you can be able to understand this concept. Because guys, the secret in trading, guys, is going to the charts. You see, trying to look for the setups yourself. Once you are able to do that, guys, then these things starts to sink in your mind. They don't become complex anymore. They become easier and easier. And once you understand and you've created many flashcards, then even when it comes to the live market, guys, once you see the strategy, you can smile. You can smile and say, wow, my setup has actually come to a fulfillment. So guys, this marks the end of our video. So don't forget to like, subscribe, and to hit the notification bell so that you can be able to see the content that is coming in the days to come. So thank you guys. Your boy Chatmaster here, signing out.